Now, I know a lot of you guys have been asking me this question about making a basket. So I thought, let me make a basket which is pretty much all weather, right? Because usually I make a growth basket or a momentum basket. But right now, because the momentum is farly factored in, let me think about making an all weather basket. Now, what do I mean by all weather basket? Whenever the market dips or whenever the market falls, this would be a good opportunity to add these companies, because these companies are future proof companies. Now obviously this is way too overvalued right now. This has to come down a little bit. I would not buy anything at this peak right now. I would not buy anything. When it falls down, I will start accumulating. So let's quickly go through this 10-12 stock basket that I have created one by one. Now these baskets, the basket that I have created has a mix. It has a mix of stable stocks, because I need to make it all weather, and it also has a mix of growth companies. So I have divided everything and I will tell you what it is one by one, right? So I call this the 50k small case, buy on dips only, not right now, because right now it is too overvalued. And this is a 50k small case, 49,836 on the day that I'm making it. Now let me show you the first two companies, and this is something I call as a special situation safe play company. Now why do I call it special situation? Reliance Industries is something that is going to soon do a demerger, right? There will be Jio coming out, Reliance Retail coming out, and this will happen in the foreseeable future, but very soon that will happen. And when that happens, the amount of money that you will be able to make will be drastically higher, right? Because whenever a special situation like this comes out and there is a demerger, we saw happening with Geo Financials as well, and more companies will come. Reliance Retail will come, Geo will come, so you will make a lot of money on that. And also Reliance is a very safe play. Safe play as in from a long-term standpoint, it has been proven that it gives good results. Whether it is great, no, but does it give good results? Answer is yes. Another special situation is ITC demerger play. Now again, Reliance, if you see, it has been doing well in the past. It has been going up quite well. 1 year it gives you 20%, which is not a bad return at all. ITC also has recently run a run up, 1 year 12%. Again, not bad, because it also gives you a good amount of dividend as well. Now ITC is again a special situation, mainly because ITC is another company that is going to do a demerger of their hotel business, which is doing really well. Their IT business is doing really well, and the cigarette business is pretty much lagging, right? So when the demerger happens, we will make a lot of money on this. And as I said, this is an all weather basket. All weather means whenever the market falls, I will look at these stocks to become my go-to companies to invest. Now the next company, I have taken the Tata House. Okay, we have two special situations done. Now we look at the Tata companies. Now the first Tata company I've taken is Trent. Now Trent is a company where growth is still intact. So let me just show you. This is basically Zudio stores, but as you know, right now everything is overvalued. So I wanted to fall down a little bit, only then I will buy this. But I'm going to keep this ready, right? Because I need the stocks ready when the market dips. So Trent is another company that I would look at investing from a long-term standpoint. Now a lot of you guys keep saying that Shashank, Trent is something that is very overvalued. It is not good to invest in a very high PE stock like this, sitting at 200 PE. But the fun fact is, Trent in the history has always been sitting at above 100 PE always, right? And it has constantly given growth at the same rate, only because it has been growing quite significantly. Whenever the growth starts stalling, we will start reducing allocation in Trent. But as of now, I believe that this is a company that still has some growth potential left in India, and it will do well. So that is why I've added Trent, but only one stock of Trent, not too much, right? Now, next company that I've added is 11 stocks of Tata Power. Now, Tata Power is very interesting because recently, if you've seen the news, Tata Power did a massive capex of I think 75,000 crores. So they are now going to invest 75,000 crores, Tata Power, to make their renewable energy plant. Now, fun fact, if you go inside Tata Power's investor presentations, you will notice that the green energy business of Tata Power makes almost 30 to 35% EBITDA margin, which is earnings before interest, tax and depreciation. That means a lot of free cash will be left for them to actually start paying out their interest of whatever they grow. But if 75,000 crore is what Tata is planning to invest, that means the debt liability that they can take from a debt to equity standpoint, they can take another debt of approximately 75,000 crore easily. So I don't know how they're going to do this debt to equity ratio on this, but whatever it is, when a company invests 75,000 crore and a company like Tata invests 75,000 crore, we can surely think about some growth opportunities that will come into the game, right? So let me just show you Tata Power. So Tata Power is actually now consolidating in these two bands, right? If you look at the bands, it is consolidating right now. So that is something that is good. That means we will get an opportunity very soon. Both are these bands where the support, demand and supply zone is there. So it has been trading here and very nice. It is peaceful, but there will be a rally that will start, and that time it's good to accumulate these type of companies. The next company that is again a Tata House company is called IHCL, which is Indian Hotels. And this is a company of the house of Tata, which is Taj Hotels. And this is also doing a very good rally, very good momentum, and I believe this momentum will sustain, and mainly because the amount of expansion they're doing, mainly with Ginger hotels and their Taj properties. And Ginger hotels are getting very good margins on Ginger hotels as well, and they're doing aggressive expansion on all of this, and they're also going international as well. So these are some things that I'm going to keep track of, and this is something that can do really well in the house of Tata. Now coming to auto industry. Now I wanted to have some exposure in auto industry because auto is the future of our industry, right? EV is going to become very well and all of that, but I don't want to buy directly EV companies. Like Tata Motors and Mahindra are having a problem with demand. Sometimes it goes up, sometimes it drops. So all of these issues they currently have, so I don't want to be worried about those issues. So what I'm doing is I'm buying proxy players in the auto space. Now proxy players, there are two players. One is Precall, which is doing really well, good management, fundamentally strong, has been giving good returns. If I had to show you Precall over here, and it's a very slow, peaceful growing stock. It is in the mid cap, small cap, mid cap range, 5,900 crore market cap, 38 P, so it is not overvalued. Very slow grower, आराम से grow होता है, कुछ stress नहीं, कुछ जल्दी नहीं है, right? And if you see, the revenue also has been growing, but आराम से, nothing too much, right? And they do proper capex, they're almost debt free. So this is a company that can do really well as a proxy play. Now another company in the same area, which is Sansera Industries, Sansera Engineering, similar characteristics, 9,000 crore market cap, 47 PE, right? Does stock price is going up and down, and a lot of institutional buying has happened here as well. But if you look at the yearly results, you will again see that this company is a chill growth company, right? I like companies that grow slowly. I don't want you to grow very fast, because if you are growing slowly, if your PAT is growing every year, your result and everything will catch up automatically. Because if the PAT is growing, then your EPS is growing. If your EPS is growing, then your stock price is growing. So everything is growing, and their debt to equity ratio also is completely in check right now. And they are also raising a lot of money coming from DIs. Look at the DI holdings, 34%, which has increased from 28 to 34, and FIs have fallen from 22 to 15, and the founders have not exited yet, right? So this is very interesting, and I'm going to keep a track of this. But this is something that I'm putting in my long-term basket. It's not a short-term play; it's a long-term play, right? So Sansera Engineering is the next company in that, as you can see. Now, apart from this, now I'm adding some growth players, right? Because we have taken some safe plays, we've taken some normal plays. Now let's add some fast growing companies. Now definitely Trent is a fast growing company, Precall is a fast growing company, Sansera is a fast growing company, but I want more fast growing companies, right? Because that is the only way I can beat the benchmark index, right? Beat Nifty 50 index or Nifty 500 index. Now the first growth play is a company called Rate Gain. Now understand the risk reward ratio on Rate Gain, right? RateGain is a SaaS player, one of the largest SaaS player in the travel and tourism business. So if travel and tourism starts doing well in India, then this company will do well. Globally, if travel and tourism is doing well, this company will do well. But if there is a global slowdown of people going to different countries, less travel and all, this company's results will look bad. So I'm giving you both sides, good and bad. But because it is a SaaS company, IT company, which is software as a service, the amount of free cash flow they make is very beautiful. So it is again in 8,900 crore company, 53p, right? As you see, the stock price has not moved too much. But if I show you the results, right? See the results growth. Very beautiful result growth. Very good result growth happening here. And if you look at the reserves, they have 1,400 crores in reserves with 17 crores borrowing, because it's an IT company. So this has a very good potential of a lot of dividends, a lot of bonus coming into the future as well. Heavy on the FII, DII holdings also. So this is a company that I feel in the long term, at least 5 years time frame, will do extremely well. Next is Varun Beverages, one of my favorite companies, which is a recession proof kind of a company, which is basically your PepsiCo bottler in India, and they have now expanded into Sting. They have expanded into a lot of other brands. So this is an FMCG play focused more on consumption theory of Indians, right? Now, I like this play. It seems very interesting, and this is a very long-term play. So if you see Varun Beverages from a long-term standpoint, it has been a consistent compounder, and if you see the results also over history, over time, slow growth, peaceful growth, but good growth. And this is all regarding how we consume as Indians, right? Now you say Indians are moving towards health conscious stuff. They have created health conscious stuff also. So it is just like that. And look at the amount of money they make, which is beautiful. Look at the compounded growth rate. So this is a very safe kind of bet in the FMCG. So technically we have two FMCGs, which is Varun Beverages and ITC. You can remove ITC if you want, but Varun Beverages has a different growth alpha to it compared to ITC. So that is the growth play. Then we have another growth play called KPIT. Now KPIT again is a proxy of the automobile industry. So if the automobile industry does well, then KPIT will again do well. Now if you look at it from a long-term standpoint, not last 1 year, you see that KPIT is a very good buy around the 200-day moving average line. And if you look at the PE ratio of KPIT, it has always been pretty high. But KPIT is a company which is again very long-term, very futuristic. They have also invested in sodium ion technology, right? They are also doing very well from their cash standpoint, and their sales have also been growing. They have been getting new orders. So everything looks very good from a KPIT standpoint. So this is the next growth play. Now, if I zoom out and show you how this comparison happens with your performance of Nifty. So you can see that last year, obviously last year's performance is not equal to this year's performance, but last year if the equity market gave 131, the small case would have given 158. But is the growth triggers intact for these players? Answer is definitely yes. How many companies do we have? Not much, just 10. Now as you can see, again zoom out a little bit and look at these companies. These are pretty safe plays, right? Out of which I can say, if you ask me, Shashank, what are the only risky plays that you see? The only risky plays here would be Precall, Sansera and RateGain. Everything else will definitely be a good multi-bagger in your portfolio over a long period of time. But if I don't have some risky plays, then how will I beat the index, right? So I need to beat the index as well. So that is why these different companies are in the space. Now, will all the companies do well? Answer is no. I don't want all the companies to do well, but I want 3 or 4 companies to deliver very good result, which will push my entire portfolio up over the next 3 to 4 months, right? 3 to 4 years. So this is a very long-term horizon portfolio, but please don't get overexcited and invest now, because look at the Nifty. It is not a good time to invest. I want it to fall down. It will fall down. It has to correct by law of just mean reversion. So once it corrects, I will deploy more capital, or you can deploy more capital into this. But again, guys, do your own research before investing in this small case. Again, as I said, this is a long-term small case. So you can, if you want to keep a stop loss, definitely keep a stop loss based on your risk appetite, not more than 10%. I would say personally, and don't obviously put all your net worth into this. Do your own research, tweak a little bit about this, but this basically gives you a starting point of an entry, right? So that was the entire episode. So guys, I hope you guys enjoyed this episode. I hope you guys like this episode. And yes, I have done your 50k small case. So a lot of guys who are constantly telling me, Shashank, do small case, do small case. I made an affordable one. So I hope you guys enjoyed this video, and I hope you guys like this video. And if you did, click on the like button and put it in the comment section below. What would be your 10 stocks? If you had to decide 10 stocks in the comment section, tell me what would be your 10 stocks that would be a fast grower in the future, but obviously have some balance in it. Okay, this is me, Shashank Udupa, signing off. Take care. See you guys. Bye.